Check one, two, three. Hey everybody, it's Michael Helms, also known as Michael the Sound Guy, and this is the Location Sound Podcast. You know, each episode we talk with location sound mixers, boom ops, and other industry pros about the various aspects of recording sound on location, whether it's for feature and independent films, TV commercials, interviews, any time where dialogue from actors is recorded. I started my career in the recording studios in New York City with some of the big artists back in the day, and later on projects for networks like HBO, Sci-Fi Channel, and the Cartoon Network. As time went by, I got out of the studio and began working in production sound. Whether you're a seasoned veteran or just starting out, thanks for joining us. All right, my friends, this episode is a little different from the interviews we normally do with our guests. I've had a number of listeners reach out regarding how the freelance sound community handles their income taxes. Are there ways that we can reduce the taxes we pay? Are we missing out on some deductions that we didn't know we could even take? So let's talk to a tax professional. Please welcome CPA and Profit First professional, Ruben Cruz.
Michael, good evening. How's it going?
Good to see you, Ruben.
Good to be here, too. I'm excited. Hopefully I could provide some value and save some tax dollars.
Well, let's jump right in. First off, some of our freelancers in the production community do their taxes themselves, and some use a CPA or accounting software or other tax services. So what's the benefit of having a CPA do it?
Yeah, I think it boils down to the complexity of their situation. So if you're just starting off, a lot of times a lot of people are used to using the TurboTaxes or doing it on their own, which is fine. But as they continue to grow and blossom in their business, it makes sense to consider a professional, whether it's a tax professional or CPA. And what we could provide is a little bit more knowledge of how to take more deductions, what are proper compliant, why you should stay in compliance, and stay within compliance, but also some of those strategic tax savings that are out there that the common freelancer does not know.
Now, people always think, well, how much does this cost? So what fee does a typical CPA charge for their services?
Yeah, so once you become a freelancer, you become independent at that point, obviously, so you're self-employed. In that case, you're filing something that's called a Schedule C. And when you're filing a Schedule C, it's part of your individual tax return. Usually the fees are a little bit higher because we're including the business income on your tax return. So typically you'll find the CPAs, they'll range between, I would say, $250 to $500 for a Schedule C tax return. Usually I would say average is about $350.
Okay. Now you also have a top 10 list of tax deductions that we should take. So tell us about those.
Yeah, so these are common things that I see people miss every single tax season. Some of the things that they're just not aware of, or some of the things that they're not tracking. So some of these are, your mileage for your vehicle. If you're not keeping track of your mileage, there's ways to do it more efficiently, easier. There's applications out there. A little go-to nugget I give for everybody, Mile IQ. It tracks it for you. You download the application, you put your GPS location settings on, and it does it for you. Simple as that. So miles is a big one that we see people not track and take the deduction. We also see a lot of business meals or business outings, meetings, etc. Those are all deductible. If it has what I tell my clients, Mike, all the time is if it has anything to do with business, let's deduct it. Let me or let your tax professional or CPA say, you know what, we can't deduct this. But keep track of the receipts. Keep track of the purpose of the actual meeting or whatnot. That's another big one we see. Supplies, obviously equipment. That's pretty common, obviously, in the industry, right? Buying new equipment, new tools, new software, et cetera. Those are pretty much self-explanatory. But some of the ones that we see commonly missed are the mileage, some of the meetings that they have with clients or with even coworkers or whatnot. If it has anything to do with business, let's write it off.
Okay. You also had on your list contract labor.
Yeah. So there's a lot of outsourcing going on in the industry. So if you have anybody that's helping you with lighting or that's helping you with grip or whatever it might be, whatever you're paying them, that's an expense deduction to the payer, and it's income to the person receiving it, right? So whoever you're paying, that's income to them. So there's a lot of confusion about 1099s as well. If you're paying them more than $600 in the year, make sure you're keeping a 1099 and submitting one to them as well at the end of the year. IRS is starting to crack down on that. So that's something that's important.
Let's see here. You had licenses and permits.
So any licenses, permits, certifications, continue education, whether it's, you go into an event, all those things are deductible. Boils down to the key thing I like to say, when in doubt, if it has to do with business, keep track of it. Let your professional tell you, you know what, we can't deduct this.
All right. Now you had utilities here. I guess, how would that refer to us?
So a lot of freelancers work out of their home. But when you work out of your home, there's obviously you usually have a home office, and to operate out of your home, obviously you're going to be sharing some expenses with your personal expenses like your utilities, sometimes cable, sometimes internet or whatnot. Those are called indirect expenses, right? You need them for your business, but you're also using it for your personal life. So there's a way to allocate a portion of those indirect expenses and deduct them on your tax return off your business income. And that's exactly what utilities are. So say if you're paying anywhere, this, for example, we'll keep it simple, about $1,000 a year in utilities. And let's say your home office is, let's say 20% of your home, then you could deduct, a good $200 of a deduction in utilities.
All right. Also, you mentioned insurance, and a lot of times, or most of the time, we are insuring our equipment. So how does that work?
Yeah, insuring equipment, that's fully deductible. Fully deductible. Another indirect expense, so going back to what I was saying before, not the insurance on the actual equipment, but insurance on even your house, right? Those are, you could deduct a portion of that as an indirect expense. So it's definitely a conversation to bring up with your CPA. And that's kind of where we provide our value. Those are things that are commonly missed. And we're leaving money on the table if you're missing them.
All right. And then you had rent as well.
Same thing. Yeah, rent. I know a lot of freelancers, they rent studios. That's fully deductible. Even if they're renting out a apartment or whatnot, right? You could take a portion of the apartment and deduct it as well.
And I think finally you had legal and professional fees.
And that's like working with somebody like myself, working with an attorney, working with an insurance agent, anything along those lines. If it has anything to do with the business, even if it's legal and professional, we're going to want to deduct that as well.
All right. And you had advertising as well.
So any kind of Facebook ads, any kind of marketing materials, business cards, flyers, any ads in a newspaper, anything along those lines that are advertisement that's directly related to the business is fully deductible. I actually do want to bring up one more thing, Michael. I know I mentioned meals and having sitting down with individuals regarding meals or whatnot. Those meals are actually 50% deductible. So they're not 100% deductible. That's one thing I just want to mention because I know I brought that up a second ago.
Okay. And what I always try to do too is write down the date and who I had dinner with, maybe what it was pertaining to, things like that. So we should do that as well, just in case.
Yeah, that's getting into the compliance side, and that's making sure that you're bulletproof when if there's ever an audit. What I like to tell my clients is the likelihood of an audit is probably low, but the impact could be significantly high, right? So how do we bulletproof you? And the way we bulletproof you is having receipts, having documentation, what the business purpose was of the meal, who were you sitting down with during the meal, those kind of things like that you mentioned are key to do. And for your tax preparer, for your CPA, we don't necessarily need every receipt. It's more for when there's an audit, you want to make sure you have support and backup.
All right. Now, I know a lot of people are organized, but some people aren't. So from the standpoint of a certified public accountant, how should we be organizing our receipts and expenses during the year so when we do come see the CPA, how does that help you?
Yeah, it's funny because no matter how much we try to educate people, we always struggle with this. But we find that most of the time, the clients that are new in business, obviously they're trying to figure out how to operate their business. And some of the things they don't think about is keeping good records, right? So we get the shoe boxes or the garbage bags full of receipts, and we're like, yeah, you're bringing me this garbage bag. I hope you brought me your checkbook too, because it's going to cost a lot of money for us to go through that. So anyway, so what I tell people is there's a time of your business when you're a freelancer where, let's say after a few years, you understand your business and how to operate as a business owner. And then there's a time where you want to graduate, right? And that graduation is fully becoming an entrepreneur. And as part of an entrepreneur is keeping good records, keeping good accounting records. There's software out there that helps out. QuickBooks, Xero, FreshBooks, Wave. Those are all different kinds of accounting software that help simplify this. Now, the other old school way of doing it is obviously writing down your transactions, keeping a ledger, right? Or an Excel spreadsheet. So either of those methods work. What I try to tell my clients is if you have your receipts, that's great, but go through them and tally up all your gas expenses, tally up all your supply expenses, tally up all your advertising expenses, because that's all we need as tax preparers. All we need is those totals for each category, and we're good. And it's going to keep, I mean, when you think about it, Michael, if you're a business owner, you want to know how well you did as well. You want to know if you're profitable or not, right? So that's the only way to do it, right? Take all those items. I know it sounds laborious, but as a small business owner, as a self-employed freelancer, that's part of doing business. You got to learn how to graduate and get to that level.
That's good advice. All right. Now, I know some freelancers get into trouble by not setting aside a portion of their earnings for taxes. So what's a good rule of thumb percentage-wise that we should be saving?
Yeah, I like to tell people about 15%. 15% of their revenue that they're bringing in that should be put aside for taxes. And probably the best way to do that is opening up a separate account, separate bank account, and allocating that money on a monthly basis, just putting it aside. And then proper compliance is to make estimated quarterly tax payments. So every quarter, the money that you put aside in that account, 15%, that's what you're submitting to the IRS. IRS wants their money. They want it untimely as well. So that's the way to avoid underpayment penalties. And that's also a way to avoid any headaches come tax season because you get hit with that lump sum tax liability. And it's a real awakening for new business owners when they see a huge tax bill and they don't have the cash to pay it.
Yeah, I had a good friend years ago. He was touring all over the world for all these big concerts, and he was just living the dream, and he wasn't paying his taxes. And once they caught up with him, he paid for years. He was struggling.
100%. And I see it all the time. Actually, I'm working with a client now that owes $500,000, about a little bit above $500,000 in back taxes. Same scenario. Young guy, made a lot of money and didn't put money aside for taxes. He pretty much was partying and living off of that money. And it came back to bite him a few years after that. So we got him on, we're doing an installment agreement with him, which is a payment plan with the IRS. And we also are doing something that's called an offer and compromise. And what an offer and compromise is saying, hey, look, IRS, the liability is $500,000, but we could only pay X amount. Our monthly cash flow is X amount. Our expenses each month is X amount. So here's our offer. Would you accept it? So we're in the process of doing that with the IRS, hopefully get his tax liability a little bit down because $500,000 is a tough pill to swallow.
Yes. I think, yeah, for sure.
Nobody wants to pay $500,000, right? Some people would rather go to jail.
Now, most of the freelancers that you deal with, are they set up as an LLC as well?
That's a good question. I would say yes. And there's specific reasons why you do that, mainly for the legal liability protection. One of those things is like going back to what I was saying, when you graduate as a business owner, incorporating is a smart thing to do. You're protecting your personal assets. Now, I'm not giving any legal advice out here. I'm a CPA. I'm not an attorney. But once you start making a certain amount of money, it's something to definitely consider.
Okay. Yeah, because once you go LLC, you are filing quarterly tax reports, correct?
You should be. So you should be at least paying estimated quarterly taxes. I should say even before that too, Michael. So even if you're self-employed, that's income. Say if you have gigs that you're doing as a freelancer, and let's say your net income after paying out some contract labor or other expenses, let's say you made a few $1,000s, right? Well, that's income that's not being taxed. So whether you're a sole proprietor or you're an LLC, you should be putting money aside and paying quarterly taxes.
Okay. Yeah, that's something I've never really, people don't talk about that, especially if you're just a sole proprietor, you're just doing your taxes, you're just making your money, and people don't always talk about that quarterly side unless you were incorporated.
Right. 100%, but you still should be doing it. I mean, at that point, you're still, if you're getting paid and you're not working for a company as a W-2 employee, you're working for yourself and you're self-employed. So you have to keep track of how much you're making and, like we mentioned a second ago, put money aside for taxes, whether you're incorporated or not.
All right. Now, many freelancers, when they're first starting off, they finance a bunch of gear and they often have trouble making the payments. So what's your opinion on that and what kind of recommendations do you think people could be doing?
Yeah, cash flow is huge. And I don't think it's definitely for freelancers, but also for all kinds of business owners, different industries. And especially if you are starting the business, your startup costs are usually a little bit higher. But a good rule of thumb is keeping track of your debt, your profits that you're making, just like you're putting money aside for taxes. Well, you should be putting money aside of paying off some of the debt. The good thing is when it comes tax season, that equipment is depreciable. So we could take expense deductions by depreciating those assets. So that's another reason why it's smart to work with a CPA, because those are some a little bit more sophisticated conversations that you'll have with your CPA.
All right. Now, we normally ask our guests what was their worst on-set experience, but regarding your tax clients, and without mentioning any names, what's a disaster client situation that you've had and you had to try to fix it?
Yeah, quite a few come to mind, but I'm actually going to go with one of the more common ones because it's good for business owners to understand this. And it's when you make money, right? And you expect to pay no taxes. And that's a big misconception out there, right? Meaning that if you're bringing in income, expect to be paying some taxes. There's only so much you can do as a CPA or as a tax preparer. One thing, golden nugget I want to throw in there too, is there's a difference between tax preparation and tax planning. And us CPAs, I think we do not educate enough in telling our clients that. And the reason why I know that's a fact is because at the end of the year, you get the taxpayer coming in and getting their tax work done. And they're like, okay, I need you to help me deduct all these different things and come up with all these tax strategies to reduce my taxable income so I pay less in taxes. But in reality, it's too late at that point, right? Tax planning happens throughout the year. And it is very important to sit down with your CPA. Now, every CPA doesn't do tax planning. And that's another misconception out there. There are CPAs that just do tax preparation, and there are CPAs that just do tax planning, and there's some that do both. So I recommend just being proactive. Any life event changes happening in your life, any regulatory changes. I mean, we just had a big tax overhaul in 2018, right? Those are reasons to sit down with your CPA and talk to him or her on how that impacts your finances. So being proactive with it. And I know I didn't really directly answer your question there, but I get that all the time, and I think educating people on that is probably more important than coming up with a bizarre story. But I hope that was okay. Good answer for you.
It's a practical experience, so that's good.
It really is. I mean, it's so common, and us as CPAs, it's very stressful. We might not show the stress in front of our clients, but we really want to strangle the client at times. There's only so much you can do. You know what I mean? Like if somebody brings in $80,000 and didn't pay any taxes, they're going to pay taxes.
All right. Well, many of us purchase new audio equipment towards the end of the year to kind of help lower our income tax. And so is that the best strategy?
It can be. I get that question a lot. What I tell clients is if you need the equipment, go for it. If you don't need it, why do it, right? Why spend 10 to save 3? It doesn't make sense to spend if you don't need it. But if you need it, go for it. Take the expense deduction in that year, and that way we can write it off. There's other things out there you could do, and I'm going to give you a few strategies here. So definitely sit down with your CPA, whoever's listening to this, or your tax professional. But there's things like hiring children. You could hire your child, believe it or not. You have to do some setup, and there's work required to make that work. But people don't know that, and there's a lot of CPAs don't bring that up. You could hire your child, literally pay them, take the expense deduction on the business, and it's not income to them, right, to the child, if it's staying below a certain threshold. And then that income that's going to the child, you can use for their living expenses, right? You could use for their schooling supplies. You could use for their daycare, for their clothes. You're already purchasing these items for them. Why not take the deduction?
Does it have to be a legit kind of job?
It should be, yeah, 100%. So it could be as simple as office cleaning, shredding of papers, filing, along those lines, even marketing. I work with, and unrelated to the film side of things, but I work with a dentist, and he has his daughter and son take pictures, and he posts it all over his social media as marketing, and he pays a child for that.
And I guess too, you had mentioned a little bit, but depending on the state that you live in, check and find out if there's any kind of tax incentives for working in the TV and film industry, right?
Yeah, there's definitely different opportunities out there to reduce your taxes, different credits. Different states have different tax laws as well. So definitely get with your CPA on that.
All right. Now, tell us about the profit first philosophy.
I'm glad you brought that up. That excites me. All right. So profit first is something that I hold very, very close in my heart. I love profit first with a passion. I actually implemented profit first in my practice and fell in love with it so much. It changed my practice from being more profitable. It helped me manage my cash flow. It helped me put money aside for taxes. And it helped me become more innovative and creative of how I'm operating my business. I first learned about profit first through a client. It got brought to my attention. It's actually a book, and it's a book written by Mike Michalowicz, and it's life changing for a business owner. That client brought the book to my attention. He actually purchased the book and gave it to me, and I probably read 10 pages, put it down, and I let the book collect dust. And then about a good 2 years later, another client came to me and was like, "Hey, have you heard about this book, Profit First?" And I'm like, "Yes, I didn't read it, and it's don't know where it's at, and it has a bunch of dust on it." And then I knew I was like, "Okay, there's something here I got to read." And it was a calling. I read it. It changed my mindset about business. It changed my mindset about the whole formula of sales minus expenses equals profits. It changed my business in whole. So what I ended up doing was I did a little more research and I found out that I could become a profit first professional. And that allows me to implement profit first in business owners and within their business. And it's been a blessing because I've been able to change so many businesses around, become more profitable, plan for taxes, operate more efficiently and whatnot. Now I'm going to dive a little bit more into what profit first is. So profit first is a methodology to drive more profits to your business. That's in a nutshell, right? That's a bird's eye view. There's a lot more to that. Some of the things we do in profit first is we do a profit assessment. And what that is we're looking at your previous 12 months of income and expenses, right? We're doing an assessment. We're seeing where you are at today, where your cash is going today, right? How much is going towards paying the owner? How much is going towards your taxes? How much is going towards operating expenses? How much is going towards other things, right? And then we're going to benchmark it against some of the industry leaders. What are they doing? How are they allocating their cash, right? So when we benchmark that, obviously we see that, hey, you're here today and we need to get you here and you're not going to get there overnight. It's impossible. So what we do is we gradually guide the client to get there over quarters. So we make adjustments over quarters to get there. And the end result is crazy hyper profits and being able to manage their cash flow and put money aside for taxes and being responsible, right? Going back to what I was saying, graduating to becoming a business owner. So that's what Profit First has done for me, has done for my clients. Honestly, it's what separates me from other CPA firms. Not every CPA firm is a profit advisor. So that's kind of what we're recognized and what makes us different.
Okay. And there's something in there about paying yourself first?
Absolutely. Just like the title of the book, Profit First. So the way the system is set up is every time you get paid, money's going into an account, and that account is called your income account, right? Then we're going to be making allocations twice a month. That first allocation that we're going to make is going to be to pay your profit account. You're paying your profit first, right? So we're reversing the script. We're reverse engineering things. Because what do every business owners do, right? They make this money, they make a ton of money, hopefully, right? Hopefully they make a ton of money. But then what do? They purchase supplies, they pay their workers, they pay their insurance, they pay advertising, and then whatever's left, they pay themselves. Now you scratch your head, you're like, wow, this business owner, they're taking all this risk, they're working nights, weekends, holidays, and then they're left with this little piece of the pie to pay themselves. There's something wrong with that formula. And Michael, is crazy that the SBA, right, Small Business Administration, did a research on how many companies are not profitable, how many businesses are not profitable. And out of 28 million companies, they found that 22 were not profitable. They were breaking even. They were barely paying their bills. That's not good odds for us small business owners when you think about it. When us freelancers, that's not good odds, right? That means only 6 million are profitable. And I think, and I truly believe that it boils back down to the formula. The formula's messed up. Sales minus expenses equals profits. You're leaving yourself with that last bit of the pie and you're barely able to get by. Let's flip that script, right? Let's pay yourself first and then everything else will find ways to pay everything else, right? So we're becoming innovative. We're becoming creative. How do you make your business more efficient? How do we reduce your expenses? Or we look at things like, is your pricing where it should be? Are you market pricing? Or is your pricing 10 years old and you're still below market pricing, right? Sales are great, but your bottom line profits is where it's at. So in a nutshell, man, I know I kind of ranted about it. You brought up something that's very, very, like I said, it means a lot to me. So I could talk hours about profit first, and I don't want to do that in this podcast.
No, that's no problem. And but as we kind of start to wrap things up, if our listeners have additional questions about this kind of thing, how can people get in touch with you?
That's a great question. They could reach out to me directly by email, ruben@crewliance.com, and that's spelled RUBEN @CRULLIANCE.com, or they could give the office a call, 813-315-8848. But yeah, they could reach out to me, schedule an appointment. I would love to do a free 100% confidential meeting with them.
Well, I want to say thanks to our visiting tax professional today, Ruben Cruz, for being on the show today.
Thanks, Michael.
And a big thanks to all of our listeners out there. If you'd like us to discuss a particular topic, please send us an email at locationsoundpodcast@gmail.com. We would love for you to subscribe and leave us a comment. We're available on Apple Podcast, and for Android users, check out Google Podcast. Also, we're on Stitcher, Spotify, TuneIn Radio, and on your favorite podcast app. Until next time, remember, sound is half the picture.